Well, one of the key points about rental income, and there are two types of property obviously separated on the tax return. One is residential property and the other is commercial property. With residential property, a key requirement is that the property be registered with the Residential Tenancies Board, and if it's not, then you won't get the interest deduction on the loan for the property. Revenue want to know the number of properties that you have, and also the rent for each property, and then you calculate the tax for each property individually, and then you collate them together, and then when they're collated together, you get your sum of the surplus and deficiencies for each property, and then that's your total. Revenue don't like people doing it on an overall basis. If you have 5 properties, you're supposed to separate each property and work out the loss for each one first, and then collate them. And important to note too, if you do happen to have an old Section 23 property, the Section 23 relief is claimed as a deduction, just as if it were any other rental expense. Should have all been claimed in the first year, obviously, of course, but you might get still have some people with Section 23 properties. Now, commercial property is the same basis, and if you have capital allowances, excess capital allowances on your rental income, then those excess capital allowances can be offset against total income, just like trading losses. And if you're a non-resident landlord, people will know the system has changed from 2023 onwards. But there's particular rules there requiring the tenant to withhold 20% tax unless there's an agent has been appointed to stand in the shoes of the property owner and be accountable to revenue for any tax that's owed. Now, the kind of expenses that you can get and deduct against rental income, generally speaking, they are repairs to the property, insurance, etc. You don't get what's called capital expenditure against rental income. Now, distinguishing what is capital expenditure can sometimes be tricky. The example that's always given is if you replace a tile on the roof, then that's revenue expenditure. If you replace the entire roof, then that's capital expenditure. And when it comes down to things like windows and doors, etc., generally speaking, if you replace or upgrade windows, it's allowable as revenue expenditure. If you same with doors, etc., inside the building. But if you engage in major, knocking down walls, etc., then that's capital expenditure. If in any doubt, get a second opinion on it,